Welcome back. Asia is down and out. Color this Friday seems to be red, and the SGX Nifty is actually better than the regional markets, you'd have to say. At least it's flat. The markets are sliding 1%, 1.5%, so maybe not too bad looking at the SGX. By the way, this index is going to be trading in the GIFT City very soon. July the 3rd, we'll be talking about the GIFT Nifty and no longer the SGX Nifty. Anyway, we'll get to stocks now. Our team is standing by with the list of top stocks to watch out for this morning. Well, hi guys, happy Friday to all of you. Let's start first with the IT headlines, which are not so sanguine. Mangalam, tell us some more.
Well, they're not so sanguine, but at the same time, it's nothing new that we got from Accenture's numbers as well. The revenues were up 3%, yes. The operating margin came in at 14.2%. This compares with a number of 16.1% same time last year. The new bookings came in at $17.2 billion. They've expected the FY23 outlook, revenue growth of anywhere between 8 to 9 odd percent in local currency, with operating margins no improvement from what they saw in the previous quarter. However, brokerages on this say that, there is some concern around dampening of small projects. We have some concerns for Indian IT. While they, maintain their cautious stance in the first half of this year, they believe that there is a possibility to accumulate these companies at current levels as well. Similar is the case with Nomura. They say that, Accenture's top end of revenue guidance has been cut again. There are no green shoots of demand recovery in Accenture, and which is why they have a cautious stance, but they have selective stocks that they like. Case in point, something like Tech Mahindra and Coforge as buys. Remember, the IT index yesterday was one of the top losers, down almost 0.75%. So some part of the street was positioning itself for weakness in commentary. See the IT stocks to open in the red, but the question is whether they recover in the second half or not.
Okay, all right. Mangalam, thanks a lot for that. Well, we'll also connect with Manik Taneja of Axis Capital in a short while from now to discuss the IT space, Accenture's numbers, and also its impact on Indian IT companies. Time to move on then. Vivek joins in to tell us about Orchid Pharma. They're looking at raising some money. Morning, Vivek.
Well, good morning. Important development as far as Orchid Pharma is concerned, looking to raise significant funds. So now, the QIP has been launched to raise almost 400 crore. The 400 crore is the 300 crore of base size and another 100 crore of an upsized option. Now, the indicative floor price for this particular issue is at 403.9 rupees a share, which is as per our sources. And the SEBI floor price actually works out to 425 rupees a share. So it appears to be a discount even to the SEBI floor price. The equity dilution at this particular fundraise works out to almost 25%, 24.2% to be precise, of the pre-issue outstanding equity share capital, going with the red on the back of the fact that, there's a significant equity dilution and the floor price seems to be below, what the current market price is.
All right, thanks very much for that. That's Orchid, and we'll keep that on the radar. Now, SBI cards, this is the latest monthly data for card spending, which we have, and SBI cards is the one we are focusing on. Abhishek has got all the details. Abhishek, morning.
Morning, Prashant. So begin with, for the sector as a whole, the credit card in force, that grew by 14.1% on a YOY basis and about 1.4% on a month-on-month basis. Total spends grew by 23.7% YOY and about close to 6% on a month-on-month basis. So spends per card grew by 8.4% YOY. This growth rate of 8.4% is perhaps the lowest in last 6 months, and it grew by 4.4% on a month-on-month basis, which is pretty strong. For SBI card, the total spends grew by 12.1% YOY, but it is declined by 2% on a month-on-month basis. So versus industry growth of 5.9% month-on-month, it has actually declined for SBI card. So spends market share has dipped sharply to about 16.9% in May when compared to 18.65% on a YOY basis and about 18.2% when compared to the April's market share. Total cards in force grew by 21.1% YOY and about 1.7% month-on-month. So cards market share over there, they continue to gain momentum. It was at 19.5% in the month of May, which compares to around 18% on a YOY basis and about 19.2% on a month-on-month basis. Per card spends, that grew by 52.8% YOY, but has declined sharply by 3.6% month-on-month. So analysts say that corporate spends might have impacted the spends momentum this time around for SBI card. Back to you.
Okay, so some decline in spends on a month-on-month basis for SBI. Thank you, Abhishek, for that. Some more stocks in focus. We have Sonal standing by, BPCL, and I think even LIC. Why are you watching for these two, Sonal?
Well, let me start with BPCL. They have a board meet on 28th of June. This is for a fundraise that the company is planning. Interestingly, it's for energy transition and new ways of energy generation as well that the company is talking about. It could be via rights issue or other modalities as well. So that stock definitely remains in focus. For LIC Housing Finance Company, the board has appointed T. Adhikari as Chief Operating Officer. This is with effect from 22nd June, that is yesterday. So that stock is on our radar as well.
Okay, all right. Thanks a lot for that, Sonal. Well, a lot of block deals took place yesterday. Vivek as well as Nimesh, they've been giving us heads up on a few of them. Vivek, take us through the list and how you expect stocks to react.
Well, good morning. Yesterday we saw 4 large block deals happening. First on our list, we'll go through Delhivery. Delhivery, Carlyle, CS Swift Investments exited their complete stake, almost 2.5% stake at 385 rupees a share. And, Norges Bank, on account of the government petroleum fund, bought almost 40.6 lakh shares. On the other hand, Craftsman Auto, you actually saw the promoter pairing stake in the company. So promoter Srinivasan Murli sold 3.8% out of the total 9% that he holds in the company at around 3,960 rupees a share. Goldman Sachs picked up 2.4% of the total equity, and Access Mutual Fund 2 bought almost 0.6% over there. HCC, yesterday, close to market close, you saw a very large block deal happen over there. 3.1% of equity changed hands. So Asian Opportunities Mauritius Limited sold 3.1% of the total 7.6% that they held in the company. Achintya Securities was one of the major buyers, picking up almost 79 lakh shares over there. Sansera Engineering, you saw almost 14% of equity change hands in that particular counter yesterday. So, two promoters, Client, Ebin Limited, sold 9% of the total 18% stake they held in the company. And another, employee fund sold almost 5.1% of the total 10% stake that they held in the company. Out of that, Kotak Midcap Fund picked up 3.6%. ICICI Prudential Mutual Fund picked up 1.1%. So, all of these blocks, most of them got absorbed. It'll be interesting to see whether there is follow-up buying or selling in these names.
Absolutely, yeah. The blocks are being bought also by institutions, whether mutual funds or others. So that's the sign of hectic deal activity. Thanks, Vivek, very much for that. So those are some of the key stocks to watch. But crude is a big queue as well, including for a lot of the oil refining and marketing companies. Manisha is joining in. Manisha, morning. What a slide, 4%, and it's still down. I mean, Brent even this morning is down about another 0.4%.
Oh, absolutely. And it's erased all of these week's gains. Until yesterday, we were in the positive for this week, but after 4% of decline, we are in the negative. And yes, this is how, this is a hawkish central banks, and that really seems to be weighing on. Because when you look at the U.S. inventories data yesterday, we saw a slide of 3.8 million, and that should have been a supportive factor, but that wasn't really the case because the way the central banks have been, apart from U.S. suggesting that another 50 basis points is coming in this year, you've seen that surprise move come in from Bank of England. That shocked the market. A 50 basis point rate hike coming in from UK now takes those rates to 5%. This is a 2008 highs for UK as well. And apart from that, you had Switzerland, Norway, Turkey, all of these central banks also hike rates much more than what the street was anticipating. So it is more macro than micro that really seems to be impacting crude oil prices right now. Most market charters tell us that until the Chinese demand doesn't pick up, and that, by the way, has been yet another disappointment, the 10 basis point rate cut hasn't really worked well for the markets. There is much more that China would need to do. Until that comes in, we are looking at further pressure continuing for the crude prices.
Okay, all right. Thanks a lot for that, Manisha. Well, a quick recap then of all the stocks we just discussed. Stocks with positive news flow include BPCL, LIC Housing Finance, Delhivery and HCC. While stocks with negative news flow, you have the IT stocks, Orchid Pharma, SBI Cards, Craftsman Auto, Sansera, as well as ONGC. Well, a lot of brokerage notes came in earlier today as well, and Surbhi is joining in to run us through that list with all the notes for the day. Morning, Surbhi.
Morning, Nigel. So first on my list is Bajaj Auto. So JP Morgan has written on a Bajaj Auto with an overweight rating and a target price of 5,400. They say it remains one of their preferred picks due to some of the reasons they've mentioned are they see two-wheeler and three-wheeler exports to be bottoming out. They see domestic recovery in the two-wheeler segment. The EV volumes have also started picking up, and they see improving margins due to better mix. Next on my radar is the real estate space. Now, Morgan Stanley has written on it ahead, and they say the property upcycle is now well entrenched. The listed developers are well prepared with the new launches and execution capabilities. The balance sheets have been repaired and valuations have risen above the mean levels. They have an overweight rating on DLF, Phoenix and Shobha, an equal weight rating on Oberoi, Macrotech and Godrej Properties, and in their REIT space, Nexus, the recently listed company, is one of their preferred picks.
Surabhi, thanks very much for that. We'll take a very quick commercial break here. We'll have Siddharth Khemka of Motilal Oswal Financial Services for a quick fundamental check. We'll discuss specific stocks. Later, we'll have Manik Thaneja of Axis Capital to talk about the IT services sector in light of the Accenture results. So stay tuned. That's the conversation coming up in a bit.